US trading floors were closed yesterday on the occasion of the bank holiday, Independence Day. All key US stock indexes closed on Friday with the confident gains. Amid the thin market yesterday, the main event was a scandal at the OPEC summit. The cartel and its allies failed to reach an agreement on oil production policy for August and beyond. The vote over oil output disrupted the consensus. This, in turn, makes energy investors unnerved. Later, we will discuss the response to the failure to make a deal. On Friday, the S&P 500 closed at a new all-time high on Friday. Today, the index is trading almost flat at the level it closed last week. Now it's trading at near 4,340. It's expected to trade in the range of 4,310 to 4,390 in the coming few days. We will see how Wall Street will respond to the minutes of the Fed's policy meeting, which are due tomorrow. The burning question for market participants whether the US Fed is going to take any measures to curb rampant inflation in the near future. Meanwhile, the stock indexes are able to extend the advance. There are preconditions for that: the lack of important news, a robust economic recovery in the United States, and steady improvement in the US labor market. The US dollar looks rather strong in the long term. However, to revive a new bullish wave, the US currency needs either fresh evidence of high inflation or at least some hints from the US regulator about tightening monetary policy. Perhaps the market will find out such news tomorrow. On Wednesday, market participants will observe the minutes of the Fed's policy meeting in June. In the meantime, the US dollar index is trading at around 92.00 points. It's likely to hold in the range of 91.50 to 92.50 in the near time. Analysts do not rule out a protracted consolidation in this range. The greenback is asserting strength against its Canadian rival, even amid the ongoing surge of oil prices. In the meantime, the USD CAD pair is trading higher at about 1.2310. The pair is expected to trade in the corridor of 1.2260 to 1.2420. Analysts reckon that the pair will hardly break the level of 1.2420 upwards. This is the area where inflated oil prices will be able to unwind the headwinds from worsening trade between Canada and the US due to the overvalued Canadian dollar. Bitcoin has been trapped in a narrow range as we predicted earlier. The information background lacks any market catalysts for the crypto market. Crypto traders are anticipating either the end of the holiday season or any significant news that is capable of pushing the Bitcoin price in any direction. For the time being, the most popular digital token is expected to trade in the corridor of $34,500 to $33,500. To sum up, the long weekend in the US is over. Today, traders are ready for a market buzz in the North American session. This sentiment will set the tone in global financial markets for the week ahead. Subscribe to our channel and don't forget to leave your comments. See you tomorrow.